Good evening to all of you. Welcome you to today's webinar. Today we are going to look at the views, particularly the Nifty view as well as the Bank Nifty view. Also, we may also look at some stocks. Now, the market has been so volatile that it become very difficult to figure out whether the rally which has taken place from 15,700 levels to 17,400, whether that will sustain or not. Normally, we always get a sort of a doubt, particularly when there is a crisis. We always have doubts whether this rally, any rally for that matter, even after the this pandemic set in, when the market fell from 7,500, any rally was only considered as corrective. Then only after some time we could recognize that yes, this is a bull market. So similarly, probably the situation could have changed, like what we saw 2 years back. Maybe the situation has changed. But as technical followers, we just need to follow the chart and we should not make any presumptions about the market. We should just keep following the market. Of course, we need some estimates. That is where probably some resistances come, where some supports can come. So estimates undoubtedly we should have. And also we should know that if this is a rally which has started, then below which level probably the market can again tip into a bearish mode. So we will look at all those things from the perspective of the simple bar charts as well as in terms of the numbers. We will look at the Nifty as well as with the Bank Nifty and also with some stocks. Now we will straight away go to the chart. This is Nifty daily chart. This is a candlestick chart. And normally, any candlestick chart on a daily basis and all will have a lot of noises, because even in a daily chart in index as well as in stocks, we can see so many ups and downs. So this, if you see the red candle is bearish here, and the what is supposed to be a slightly a bluish tinge candle is a bullish candle. So we can see a lot of ups and downs candles which are here. So this will definitely lead to some sort of confusion. So if you need a clarity, we should always go for a bigger chart. Then come down to a smaller time frame chart. So we will now look at the monthly, weekly and then daily chart to get a handle of the present trend, and also how we should frame our trading strategies based on the views that we have right now. So let us go with the big chart first. So we will look at the monthly chart first. So I'm just expanding it for you, and this is the monthly chart right now. Okay, this is a monthly chart. Okay, now last 6 months, 1 2 3 4 5 6 months, the peak was made 6 months back, and we are now seeing some sort of a flag formation. Normally they call it as a flag formation in patterns. So this is a typical flag formation where it is now getting the last 4 months it is going to be within a particular channel. Now we'll redraw the channel now. So the monthly chart, so let us say this is the bottom, and bottom to bottom, assuming this month now is over almost, so we are now drawing this. Okay, now we will keep a parallel line right now. Okay, this is a parallel line. So we'll again so now it is between these two lines. So any rally right now next month can just go and hit this top channel and probably have some correction. Now that is coming closer to 17,568 to 17,600 levels. So we should be quite careful. Our estimate probably now could be that 17,568 or 17,600 on the upside probably can give a lot of resistances, because even now it is, if you see a top, a lower top, a bottom, a lower bottom. So typically in a monthly chart, this is still in a bearish mode. So the monthly chart, Nifty is still in a bearish mode, with a chance that probably it could be a 17,600 resistance. So Our view first is Nifty. Okay. So Nifty will have a resistance closer to the 17,600 mark. So this is the big picture indication. Then we have already said that normally the fall in Nifty is around 5 to 6%. Normal correction in Nifty could be 5 to 6%, and 5 to 6% right now means around like 900 to 1000 points, because it is 17,500 or so. So something closer to 1000 points. So now we have already got a rally which is up to 17,450 or 460. So we should expect something like a 16,500 as a strong support in case if it comes. So very closer to the 16,500 will normally mean a 5 to 6% of correction from the present peak, which is 17,432 or 440, which happened yesterday. So our estimate for Nifty right now is that it should, in a big picture, it should stop closer to 16,500, any fall right now, and any rally right now can have a resistance closer to the 17,600 levels. So keeping this in view, you need to frame your strategy as far as investment is concerned, which means that any dip towards the 16,500, 16,600 levels, we can look towards buying. And also we have seen previously also there has been many occasions, important occasion where it held at around 16,600 levels. Look at the chart. See this low, 16,410, right? 16,410, and even this month, no, it was 16,200, and before that, if you look at it, it is 16,835. Now on a daily chart, we will look at the weekly chart and daily chart. So this is a weekly chart, and a low of 16,410, right? And before that, we had a 16,782 or 800 levels. So these are the important levels of support. So we should look at some sort of a support coming closer to 16,800 levels and then 16,400 levels. So based on what we discussed right now, 16,800, then approximately a 16,500 levels should be very close important supports in case if Nifty falls. And we will have a strong resistance coming closer to 17,600 levels. So if you are looking for some sort of a trading position, we should now come down to a slower time frame. Now we have seen that monthly, weekly. Now we should look at the daily and the hourly chart in order to fine tune our trading call. Now let's look at the daily chart. The daily chart, if you see, we have drawn now the last 1, 2, 3, 4, 5, 6 days, there has been no close below this particular close, that is 17,117. So we need a a close below 17,117. So right now we can say that on a daily chart it is bullish, because we are getting higher tops and higher bottoms as per the Dow theory. So what we need is a close which is below 17,117 to establish the fact that it can go down up to 16,800 or 16,500. So a big trading call can come only if there is a close which is below 17,117. So we'll do that. This is a spot Nifty. So the spot Nifty has to close below 17,117. So a close below 17,117 in Nifty can probably drag it down to 16,800 levels or 16,500 levels. 500 levels. So this is how you should now look at the big picture, then boil down to what you should do when you get something at a lower level, to a lower time frame, and fine tune your trading call. Now suppose if it continues to rally, what to do? Now what is the recent peak on a close basis? See, we need a close which is above this high, which is above this close, right? which is 17,315. So in the last 6 days also, we have not seen any close above 17,315. So we need a close which is above 17,315. So on the upside, if you get a daily close above 17,315, you can continue to be on the long side. So a close above 17,315 means you are long with a stop loss, because any trading plan should have a stop loss, should have a target. So the stop loss is a close, daily close below 17,117. Okay, and the target, as I told you, it could be closer to 17,600, very close to 17,600, where definitely there will be some sort of a resistance. There will be some sort of a resistance. So a daily close below. Similarly, you can put it on the bearish side. Now this is a long call. A short call can be like this: a close in Nifty below 17,315, and the target could be 16,800. Okay, so now one of this has to happen. So very shortly, that is, there has to be a close which is above 17,315, or there has to be a close below 17,117. So whichever direction it moves, you take a call. You take a bullish or bearish position according to that movement. If there is a daily close above 17,315, you be on the bullish side with the target closer to 17,600, and then a stop loss below 17,117. Similarly, if you get a close which is below 17,117, you be on the bearish side with a stop loss of 17,315 and a target of 16,800. So this is the trading call as far as Nifty is concerned. The big picture is it could be between 16.5 and 17.6 for the time being, and one of this has to somewhere break for us to get a confirmation that Nifty is heading towards its previous peaks of 18,600 and even above, or if it falls below 16.5, 16.6, probably we are likely to revisit the last important low below 16,000. Okay, now we will look at the bank Nifty now. So straight away we'll go to the chart, Bank Nifty. As seen before, we will look at the big picture first. So we will look at the monthly chart. Monthly chart also, we are getting a lower top, lower bottom, right? So this is something which we need to note. So we will draw the same thing like the parallel lines we will draw. I will connect these two lows because this one could be a very important. Already a low has been made, and very difficult to see that this low being broken. So this is the line, and we will anchor this to the recent peaks. And we will extend it both sides, left and right. Okay, so this is the line that we have drawn, and we will also keep the parallel line here. Continue. Yes. Okay. Now these are again on Bank Nifty we have drawn a line connecting the last important two lows, and we have anchored that same line above the important previous monthly peaks. And you can see that in case if there is a rally next month, we will have some resistance closer to the 38,305 or so, right? So this is a place where we can look towards some resistance. Okay, so now 30 this region around the 38,500 600 is a place where resistance can come in case if Bank Nifty rallies further, right? So now it's at 35,410. So we have got some more good amount of potential for it to rally further. and this we'll draw the line here. Okay, so this place. So this place, which is 38,500 levels, can be the most important resistance. So we have got still a good amount of possible rally that is left as far as Bank Nifty is concerned. So let's look at how to frame our trading strategy. We will look at the weekly chart and then daily chart now. Okay. So weekly chart, the Bank Nifty is still bearish because it is forming lower tops, lower bottoms. So to some extent we need to be careful about Bank Nifty going on the long side right now. But if there is, now this is a bearish candle, this week as it is a bearish candle, right? So since this is a bearish candle, in case if it starts moving above the previous peak, you can definitely look towards going on the long side. Okay. And if it breaks 36,827, I think we should look towards going on the long side, keeping 35,203, because that's a huge amount of stop loss. So we need to come down to the daily chart. But here in the weekly chart, it is a bearish candle. It is a bearish candle. So what you should do is that you should look at the pivot trading formula, calculate your pivot point R1, R2, S1, S2. So if one level breaks, then probably you should go long above that particular level, keeping the level below that as a stop loss. So that is one way of trading. Now let's look at the since this is the weekly close, we will look at that same situation. Now it's 36,827, high is 36,827, low is 35,203. And close is 35,410. So let's look at the PP, R1, R2, S1, S2 for this. PP is 36,827 plus 35,203 plus 35,410 divided by 3, 35,813. Now it has closed below this PP, right? So let's look at the R1 and S1 first. Minus 35,203. R1 is 36,423. R1 is 36,423. S1 is 34,800. Okay. So how we should use this now? It has closed at 35,410. There's a reasonable chance that it can go down to 34,800 because that is S1 and there is a close which is below the pivot, right? So suppose if it starts to rally, okay, if it starts to rally, then in that case, though it can have a resistance closer to 36,425. It can have a resistance closer to 36,423. So look, and the weekly high, the weekly high this week is 36,827. 36,827. So we can go like this. Either if it rallies, you can go short at this place and keep I of 36,825 as a stop loss, because it is closed below the pivot. Okay, chances that R1 may not be exceeded, or closer to R1 it may come. Okay, so you can go short closer to 36,425, keeping 36,825 as a stop loss. So this is one trading call that you can take. Okay. Second thing, if it comes closer to 34,800, there's a chance it can bounce back from that level. It can bounce back from that level. So you should look at fine-tuning your buying strategy closer to 34,800. Now we are speaking about the daily chart. So on that, on a weekly chart. So on a particular day, when it comes closer to 34,800, and let us say it takes some support, and then there is a candlestick formation like a doji or hammer pattern gets formed, then in that case you can look towards going long on that day, on the day's upside breakout. Okay, on the day's upside breakout. So that way you can look towards keeping watch on these levels and how the market reacts at that particular point of time, and look towards going long or short. So now, having got this particular level, what you should do is wait for one of this, mostly R1 or S1 to come. The moment it on that day when it comes to S1, let us say 34,800, then on that particular day, let us say there is a candle formation which looks as if some support has come. It could be a long shadow, it could be a doji. So based on this, then if that has happened, then on that day's high breakout, you can go for a long. Similarly, if it rallies to 36,420, on that particular day's low, you can if it's again cut, then you can go short, keep that particular day's high as a stop loss, so that you can minimize your stop loss position, because risk management is also very important, because as much as we keep reducing our loss, our profit potential can get enhanced. So you can look at that way. Now you have a daily chart. Now we will go to the daily chart. Okay. Now in a daily chart, if you see, already it has broken this particular. Now this was a low. So this low, it is a close below this has come. There is a close which has happened below 36,018. So in the last 1 or 2 days, we are having a close which is below 36,018. Right. So this was the close, bearish close, and that bearish close is 36,018. So we need a close right now which is above this particular close. Right. So this is around 36,428. So right now on a daily chart, right now, Bank Nifty is bearish. Bank Nifty is down. So when it will change to the uptrend, it has to close above 36,428. It has to close above this 36,428 on this. So we have seen R1 is 36,423, right? So very clearly that means probably this level is going to be a very important resistance, because we have seen there is an important daily close which is coming closer to 36,423. So unless we have a close which is above this 36,423, we are not going to turn ourselves long as far as Bank Nifty is concerned. Okay. So right now, if you want, you can go short also, keeping this particular one as a stop loss, or wait for some bounce back, go short, keep something about maybe this high 36,825 as a stop loss if it comes very closer to this particular level, because there is a chance that it can just spike a little higher than this particular level and then start coming down. So whenever you have a Bank Nifty day coming closer to this, just monitor for a weakness from that particular level to ensure that you go short. So Bank Nifty on a bigger time frame is also down on a monthly. On a weekly also it is down. Daily is also down right now. So on all multiple time frames, Bank Nifty is still down. Okay, and the immediate stop loss is this for the short positions. Okay, then watch for long position when the low comes closer to the 34,800. So initially we should be looking at a position which is between 34,800 and 36,425 as the range. Okay. So these are the views for Nifty and Bank Nifty based on multiple time frames, that is daily, weekly and monthly. Now we will look at some stocks also. We will look at Reliance. Okay. Let's go to the big chart, big time frame. This month is an extremely bullish month as far as Reliance is concerned. It has now broken all, if you see, 1, 2, 3, almost 4 months this one. And also, if this close is going to be there, which is 2595, 2600 next week, that is by end of this month, then that is the highest close that Reliance would have had. Highest close that Reliance would have had. So undoubtedly, Reliance is definitely on the bull trend. And that is keeping the market quite high. Now, if you look at this this one, that is the Reliance is concerned, we can look at what are the levels at which supports will come. Now, if you look at it, this particular high, this month high, where some resistance came, right? So we'll just the horizontal line. So 2485, this particular line which we have drawn, this is 2458, right? So 2458, it could be a very important support. Now, if the fall takes place, then this particular month high, okay, where there was some resistance and it was pushed a little lower, that can probably become a very important level of support. So we can buy either that particular level, okay, and put in a stop loss which is below this. This is only for investment decisions, right? So we don't expect this particular month high, there is the low which is 2180 to be cut. So I think 2180 is going to be a very, very important support, and Reliance is definitely worth to be bought on dips as far as investment is concerned. Now, those are the levels that we have seen. Now we will fine tune it to a shorter time frame, weekly chart. Weekly chart, now it's on the upside very clearly, and we have drawn this particular line 2458. So for an investment, probably you can wait for some sort of a pull down below 24, around 2450 levels before you can go towards the long as far as Reliance is concerned. Now this is the weekly chart. So daily chart, we will look at it. So on the daily chart, unless it closes below this particular day high, which is the 2410. So as long as it doesn't close below 2410 right now, I think we should be looking towards Reliance doing much better and go to much higher levels. So right now the stop loss for Reliance comes only below 2410, and the first level where it can be bought is around 2460. So you can look towards trading calls maybe when it comes closer to 2460 with a stop loss below 2410. Okay, so the trading call will come a little after some time, because there has been a rally, and today there was some sort of hesitation at some higher level. Chances of a pullback can come, and that pullback can hold itself above the 2450-60 levels, which is a decent level to go for a long situation, and keep 2410 as a stop loss. Now we can also look at the Fibonacci ratio to determine our stop loss. So we will look at the right now, if there is going to be a fall from this particular level, as I told you, this the support which is coming closer to 2510, then 2450, that is where we have been talking about, and then fall below 2397 and 2345. So I think we don't need to go up to 2345 levels. So 2450 levels, I think we should be holding towards 2450 if there is a fall from here, and we can keep 2410 or 2395, which is one level lower Fibonacci level, as a stop loss. So buy closer to 2450 with a stop loss either at 2410 or 2395 can be attempted as far as Reliance trading call is concerned. Now we will look at some other important scripts like TCS and TCS on a daily basis. Of course, there was a rally which took place close to the 40 levels some months back, and right now it's around 37 37 15 levels. And if you look at the overall structure of the TCS chart, there is an upswing, but it is not as good as Reliance. Now we will look at the bigger time frame, monthly chart. If you look at it, probably we are looking some sort of an inside month formation, because it is well within the previous month high low. So this could be a inside month. Now multiple times it has come down closer to 3390 and taken support and rallied. So 3390 to 3400 is a very important support for TCS, and any decline is a place where you can buy, keeping 3390 as a stop loss. So let's look at the daily chart in order to fine tune our investment and trading decision as far as TCS is concerned. And so if this is going to be a stop loss 3385, probably we can look towards any dip up to this level, that is 3580. So anything closer to 3580, I think it's a place where probably we should look towards going on the long side, because we don't expect the 3390 to be broken, because that's a multiple month low right now. So considering the overall strength of the particular stock, we should reasonably expect the 3390, which is also 600 points down from its peak, which means 15% lower from its peak, so which should decently hold. So keeping 3390 as a stop loss, I think the investment decision can be made keeping for a buy closer to 3580. So 3580 for TCS is a buy. So TCS 3580, the most important place is 3390. This is for investment. This is for investment, and it has an upside potential of 15 to 20% from this for this year, which can easily take it above 4000 levels. So those who are looking towards cash market investment can look towards getting on board TCS closer to 3580 levels. And as far as trading call is concerned, we'll look at the right now this particular day, it has formed a bearish candle, and so this particular bearish candle can probably take it a little lower. So this particular high of today, that is an important place where we have to put in a stop loss for 3779. So probably as long as 3779 is not broken, so any rally on Monday, it looks to be a short candidate for trading call. So 3779 you can keep as a stop loss for a short position in TCS. But if you don't want to go short in scripts like TCS, better to leave the trading. Don't do any trading as far as long is concerned, till such time we get again some sort of a bullish feeling. So on this particular today's day has taken it below the previous day low, so that is one important point. And it has also formed a bearish candle, and the close is also below the pivot. So we should look towards probably a call which is towards the R1 of the tomorrow. R1 of tomorrow as a place where we should look towards going short, keeping the high as a stop loss. So just look at the pivot point formula and look at R1 for TCS. On Monday, if it rallies closer to the R1 of TCS, go for a short, keeping that particular high as a stop loss, and put S1 as a profit. But we have to do it quite swiftly as far as TCS is concerned, because the stock can always surprise you on the upside. So now we will look at other stocks. Look at ICICI. We look at the big picture, monthly chart. Monthly chart like Bank Nifty, it is also going lower, right? So this is a low. In a monthly chart, this is also forming a lower top, lower bottom. So very clearly, the bearish tendency will continue to be there, and we have to look towards some set where probably we can again look towards going short. So how do we do? We let us take a very slightly different angle right now as far as how to go short using Fibonacci. Now from this day to this day we'll draw the Fibonacci, and so we will go to the day chart. So now what we are going to do is we are going to draw a Fibonacci from this level. See right now this has crossed 38.2% retracement, right? It has crossed 38.2% retracement. Now that means if it again falls below the 23.6% retracement, then it becomes a short candidate. So that comes closer to the 688. Right now is at 699. Right now is 699. There's a chance that probably it can take some support closer to 688 levels. So below 688 levels, ICICI will again become a short candidate, probably targeting 640 also again. So ICICI right now is definitely is definitely bearish, and we need to have a close which is above this particular close, which is 720. So as long as 720 is not penetrated again, close is not above 720, then we should look towards 688, and then probably a drop below 688 could even take it closer to the 640 levels. So right now ICICI is concerned, let's not rush into buying right now, and probably it's still a candidate to go on the shorter side of the market, and the first support can come closer to 688 levels and fall below, because the reason why we are highlighting this is this. See, this is the Fibonacci chart, right from the important high, which is the 8 which is the 7 sorry, this is the, which is from 836. From 836 to 642 we have drawn the Fibonacci, right? So the first Fibonacci resistance was 23.5%, 688. The second is 716. It just spiked a little higher above 716 and has started now to come down. So the first support that will come closer will be the 688 levels, because that is the 23.5% retracement of this entire move. So once it starts breaking that 688 again, then it becomes a short candidate. So using Fibonacci also you can find out the level below which you can go for a short. So there are multiple ways of looking for fine-tuning your trading strategies, and in that these are the things, right? See, we can use pivot trading formula. This is the conventional pivot trading formula using the average R1, R2, S1, S2. This is one. Then we can use Fibonacci. Normally these two can probably eliminate the problem of a sideways motion which you get, sideways issues which you get in a moving average, because the moving average if you do a cut below the moving average or a cut above the moving average, probably it could lead to some whipsaws. Okay. Now these levels with the help of pivot trading and Fibonacci can give much better clarity as to avoid a sideways trading losses. So one important thing that we do, important to know, is trend identification, and in that trend identification how we should not get caught in a sideways motion. That is very important. Okay, a longer time frame chart, as we explained before, plus pivot trading and Fibonacci can give you some sort of a clue as to avoid the pitfalls of a sideways losses which can come in a trend following system. Because if you use the moving average or the super trend indicators, it will function very well in a trending motion, but it will fail when it comes to a sideways thing. So normally a shorter time frame can have many sideways motion and can create a lot of whipsaws and losses. The slightly longer time frame to a very large extent can eliminate, but once when loss comes, the loss can become a little higher also. So the pivot trading and Fibonacci are two such steps which can help you to avoid the pitfalls of a sideways motion using a 10 following indicator. So we have highlighted that with the with ICICI illustration to show that ICICI we have not used any moving average and all here. We have just highlighted the Fibonacci, and here we have said that no, from the important high to the important low, the Fibonacci ratios where it is coming. So once you start having one drop, one decline below one of the Fibonacci level, you can put the other Fibonacci level as an important level for as a stop loss, and normally it will it will work. It will work, or you have to use the pivot trading formula. Now, in the case of ICICI itself, let's look at the weekly chart. So this week has been, it opened bearishly and it continued to be, a bearish situation. Now let us 778, 743, 748. Okay. Now let's we have a pivot in the trading view. We have the pivot formula also. We have that, and let's. Pivot point standard. Okay. Okay. Now sorry, we'll go. There's some error, so we'll leave it there right now. There's some problem as far as getting this particular levels is concerned, so we'll just eliminate this for the time being. Okay. I think there is a problem in the chart itself, so we will look at the ICICI Bank futures. Not sure whether this is giving the okay, we'll just leave ICICI right now. We will look at some other stock. Now we will look at how Asian Paints is, because it's normally a very investable stock. So we have the Asian Paints here, and if you look at this, Asian Paints also is slightly on the downside right now. Okay. Because of we have got a lower top, lower bottom. So only if it starts moving above this particular high, which is 30,083, we will be bullish again on Asian Paints. Okay. Otherwise, it can drop down probably to this particular low, which is the 28,880. Normally, Asian Paints is a very important and investable stock. It gives a very good return. So Asian Paints closer to 2880 is a very important place where we can go for a buy. Okay. Now we will try to revisit, if things are corrected, we will visit ICICI Bank. Okay. Now we have here it's 699. Okay. Now this is 25th March. So we will look at the weekly chart. So weekly chart here, as far as ICICI is concerned, 727, 696, 699. high is 726, 696, 699, right? So this is the these are the figures of the high low close of this week. So for which the pivot formula right now will be is 726 plus 696 plus 699 divided by 3. It is 707. So the PP is 707. That is average minus 696. R1 is 728. So you can look towards going short if there is a rally towards this, because we have got a close which is below the pivot, and now the overall candle we have seen is bearish for this particular week, right? So this particular I hopefully should not be cut, which is 727. So any rally towards 718 with a stop loss above 727 offers a very huge amount of profitable risk reward scenario. So you can look towards going short if there is a rally towards 716, 717, which is 17 to 2.5 to 3% rally, which is possible in ICICI, keeping 727 or 728 as a stop loss. Okay. So these are the very important scripts on which we have highlighted, that is Reliance, TCS, Asian Paints and ICICI. And we have also given our views on Nifty and Bank Nifty and also the trading calls. So if you have any doubts on any of this, you are welcome to post your questions now. Thank you. So thanks for your participation and happy weekend. So see next week again. Thank you very much.